Hey guys, I own close to 100 companies in my stock portfolio of the Robinhood app. There's a lot of advantages to doing it this way. For example, without selling a single one of these 100 stocks, I earn an income that is enough to cover some of my bills passively without lifting a finger. And the other advantage is I can walk into practically any store like I own the place. Yeah, they kicked us out. I may have overestimated the benefits of being a shareholder because they still don't allow filming inside the Disney store. But sometimes I get asked, Andrei, why do you have so many stocks in your portfolio? Shouldn't you just hold an index fund at this point? And the short answer is that as a kid, I was always inspired to become a Pokemon master. And you know what they say, you gotta catch them all. But the long answer is this video. But of course, this portfolio was not built overnight. It took me roughly 5 years of saving aggressively and being a financial minimalist to be able to make it what it is today. And I've had people ask, Andrei, what are the stocks that you hold? So today I wanna pull back the curtain, show you 100% transparency, show you all of my holdings, and I'll even show you how cheap or expensive these stocks are to buy today using the infamous 5-star rating system from Morningstar to determine the value that your money is getting today. Now, this is not a sales course on how to buy and sell stocks with Lamborghini affiliates. This is not that kind of a video, but if you're curious and you want to see what is possible from just an average person, then stick around. But a word of caution, this video should not be used as your sole source of information for which stocks to buy because there's a lot more that goes into the analysis of this other than just the price rating. And also, if you're watching this in the future, number one, I hope you enjoyed the Final Fantasy VII remake that's about to come out that I've been waiting for since I was like 12. And the second thing is, if you're watching this in the future, this information may be out of date because stock prices may have changed by then. And also, I want to remind you, this is not financial advice. I'm not a professional stockbroker. I'm just a normal average person who's making YouTube videos for fun, who's also never earned more than 50K per year. After taxes, for those wondering. Also, I'm going to show you all of these stocks, just like the original Pokemon rap song. You remember? Let me refresh your memory. Gotta catch 'em all. Pokemon! That was dumb. Welcome to my channel. Let's begin. Hey guys, my name is Andrei Jikh, and this is my Robinhood stock portfolio. I am up nearly 51.5% on all time, which is insanely high. But real talk, most stock traders will use this information to try to leverage you as social proof on how they did this and sell you a course. But before you give me credit and buy my non-existent courses because I have literally nothing to sell you, this is less of a testament to how big my brain is and more so about how I always say you should start investing as early as possible in life. Whether that's in your 20s, 30s, or 40s does not matter. Just start investing today because it's more important to spend time in the market rather than trying to time the market itself. Because think about it, if you do that, you have to be right twice. Not only when you buy this stock at a low price, but also when you go and sell it at the high price. And that almost never happens consistently. Obviously, I'm not smart. Just take a look at any one of my videos. But I did figure out that the stock market is a lot simpler than most people try to make it seem. So now I'm gonna break down all of my stocks under the 11 major sectors, which if you wanna be academic about it, indubitably, this is called the GICS, or the Global Industry Classification Standard. And it includes sectors such as real estate, industrials, consumer staples, healthcare, financials, consumer discretionary, energy, technology, communications, utilities, and materials. Now, ideally, you want to be invested in all of these sectors, which I am. I'm so excited because I have a lot to show you. Now, the first sector we're going to talk about is a very popular one, and that is the real estate sector. And according to my spreadsheet, 20.1% of my income, or roughly $1,386 worth of dividends per year, is coming from this sector. The first one is Healthpeak Properties, GEO Group, Chatham Lodging Trust, Pebblebrook Hotel, Stag, Omega Healthcare Investors, Tanger Factor Outlet Centers, Crown Castle, Ventus, Welltower, WP Carey, O, and national retail properties. Now, as you guys saw, these little stars next to each stock, 1 price denotes that it's expensive to buy right now, 3 stars is fair value, and 5 stars is it is cheap to buy right now. Now, the real estate sector is at the core of my portfolio because by owning REIT stocks, it gives me a really great solid income and allows me to be exposed to real estate without actually having to be a landlord, except by owning REIT stocks, I don't actually leverage my money like in real estate, unless I'm trading in a margin account or I'm borrowing money, which I don't think most people should do, but that's why I own so many of these wonderful REIT stocks. I try never to invest more than 25% of my money into any one sector and never to invest more than 10% of my money into any individual stock, no matter how much I love it. The next sector is industrials, and around 5.1% of my income is from the following stocks: Emerson Electric, Norfolk Southern, Union Pacific, C.H. Robinson Worldwide, United Technologies, Cummins with the unfortunate name, and W.W. Grainger. Industrial sector, by the way, is responsible for making things like aircraft, electrical equipment, and the T-800 Terminator. Just the basic infrastructure stuff as you do. In fact, if Skynet and Cyberdyne systems were real, they'd either be in the tech sector or the industrial sector. Pretty cool. I hope we don't die. Now, the performance of the industrial sector is very closely tied to consumer spending as well as commercial and residential real estate. Also, all the industrial sector stocks that I own have made me money because they're very conservative in the way they pay out their shareholders' money. They're not like the real estate sector where they're just money for everyone. The industrial sector is not like that. The next sector is consumer staples, and it's responsible for around 15.9% of my income, or roughly $1,096.33 from the following stocks: British American Tobacco, Altria Group, Flowers Foods, Philip Morris, General Mills, Unilever, Coca-Cola, and Hormel Foods. Now, I love this sector because humans would have a really hard time without it. No matter what the economy is doing, whether it's going up or down or sideways, you're always gonna have to buy laundry detergent, soap, gum, food, and that's what's known as a defensive investment, because when the economy is going down, this sector doesn't do as bad. But when the economy is going up, this sector generally trails behind the performance of the overall stock market. But that's okay, because sometimes you have to play a little defense to have a good offense. The fourth sector is healthcare, which are the big pharmaceutical companies that politicians are always talking to us about how they're gonna take down but never actually will, because that's not how it works. That's this sector. So around 10.1% of my income, or $692, is coming in from companies like GlaxoSmithKline, AbbVie, CVS, yes, the one with a 3-mile long receipt, Cardinal Health, Amgen, Pfizer, Johnson & Johnson, Takeda Pharmaceuticals, and Transenterix. Now, this sector actually grows a little quicker than the overall stock market because healthcare costs continue to increase, and we all feel it, right? Like, I could not afford health insurance for a very long time, so I had to donate to the church to be able to get my way around paying the fee for not having health insurance. I actually did a separate video about that, but what? You have 200 grand and you couldn't afford health insurance? Yeah, I couldn't, because that's my money to spend in retirement, not money to spend today. It's unfortunate that the USA healthcare system is like that, and I feel like the best we can do is just be investors in these companies. That way we're at least making money from them overcharging us for healthcare. The next sector is financials, which of course got hit the hardest since 2008 when the banks that were supposed to be too big to failed. Of course, as a result, we have all these strict regulations in place to try to prevent that from happening again, but it might happen again in the future, which is why their valuation is reflective of the fact that people distrust them, and I think they're right for doing so, but still, they pay a lot of dividends, and I've made quite a bit of money from them, except for one, Bank of Ozark. 10% of my income is coming from these stocks. The following dividends are brought to you by Citizens and Northern, Discover Financial, Bank of Ozark, Key Corporation, Travelers Companies, Wells Fargo, American Express, Bank of Nova Scotia, Cullen/Frost Bankers, T. Rowe Price Group, and Aflac. The sixth sector is consumer discretionary, which is the opposite of consumer staples. This one is obviously dependent on people's consumer spending. This sector is one of the best performing sectors since 2008, with a 280% increase since then, which is insane. And my income is actually $570 a year, or 8.3% from the following companies: Dine Brands, Brinker International, Hanes Brands, Gap, Williams-Sonoma, Genuine Parts, Target, VF Corporation, Polaris, Office Depot, Groupon, and Contour Brands. Then we have energy, which is probably the thing you don't have any more of to continue watching this video, so thank you if you're still around. Now, energy has been hit one of the hardest, if not the worst, since 2008. They've actually grown only about 8% in the last 11 years, which is pretty bad, and even though they have a really nice dividend, it's affected more than just oil stocks. It's also affected gas, the transportation of energy, refining, processing, and the performance of energy is very closely influenced by politics. Now, 13.3% of my income, or $914, is responsible from the energy sector, and these stocks include BP, ONEOK, Enbridge, Kinder Morgan, Shell Oil, ExxonMobil, and Chesapeake Energy. I'm down on about half of all of these stocks because energy has been hit so hard throughout the years, but that could present itself a nice buying opportunity as well. Next up, information technology sector, and this sector has made a lot of money for investors since 2008, about 279%. So if you're seeking growth, this is probably one of the best sectors to look at, as opposed to if you're somebody who's seeking dividend income, this is probably not the best sector because these companies generally prefer to keep money for themselves rather than pay out their investors to pay for things like operations, acquisitions, and just investing in new product ideas because things in tech move so fast, they need to be nimble and pivot really fast to try to compete with other tech companies, right? So around 5.8% or $400 is coming in from companies like Qualcomm, IBM, Texas Instruments, Cisco, Apple, Sun Power Corporation, and Fitbit. Followed by tech though, we have the telecommunications sector. Can you hear me now? That's this sector. So this is the exchange of media and information. Wireless providers, cable providers, satellite companies, telephone companies, generally speaking, their dividends are pretty safe and they pay out really nicely. Now, they've averaged nearly 61% increase since 2008. And for me, every communication company that I've owned since I started investing is all in the green, which is pretty cool. So 3.9% of my dividend income, or $268, is coming from AT&T, Omnicom, Disney, which I bet you didn't know was a telecommunications sector company. Maybe you did. Snap, Sprint, Zynga, Bazinga, and SiriusXM. Now, the last 4 stocks were actually given to me for free from you guys signing up to Robinhood. So if you want to sign up, link in the description below this video. It helps me get paid a little bit, helps me eat. And by the way, I used to get paid in ramen noodles, but now my channel is earning like sushi dinners, but I'm not eating them because I'm just hoarding the money because I don't know when it's gonna stop. True story. The 10th sector is utilities. If there's such a thing as monopolized companies, this is the closest thing we have to them. As a result, they're heavily government regulated because if they can get away with charging us $100 per gallon of water, they would totally do that. So the less regulation here, the more money these guys make. Now, this industry is not going to grow a ton, but they've done a very respectable 128% in the last 11 years because people are always going to want to pay for a warm home, a hot shower, and electricity because a hot pocket for 20 cents is a steal any day of the week. I want to shave that mustache and then have gelato. If you guys can name that reference, I would be so surprised. So 5.7% of my income, or $388, is coming from National Grid, Northwestern, Southern Company, CenterPoint Energy, PPL Corporation, Dominion Energy, and Duke Energy. And the last and final sector is materials, because we're all about that material life, am I right? Just kidding, it's not that kind of materials. These are companies that deal with natural resources, such as lumber, chemicals, metal, sometimes oil, and even natural gas. That wasn't me, what are you talking about? That was my coffee mug sliding across the desk. Anybody following politics right now? You totally get the reference. Just me? Okay. Now, this sector performs about the same as the consumer discretionary sector because the demand for these materials is reliant upon a good economy and people actually wanting to buy things. This is the sector that I have the lowest amount in, which is only 1.5% or $103 coming from companies like WestRock, LyondellBasell, International Paper, Eastman Chemical, Lindell, and AK Steel Holding. So that makes close to 100 companies. But why so many? Well, it actually allows me to have a $0 expense ratio for owning my own index fund, so to speak. I pay nothing for that, and it gives me more fine-tuned control if I want to do something like tax loss harvesting to offset my gains and my losses. And with that comes my shareholder voting rights, which is important because with that, emotionally, it makes me feel like I'm an actual investor rather than a speculator just holding some random abstract piece of paper that doesn't particularly mean much to me. It gives me more staying power, so to speak. But more importantly is the emotional reason, because this is like my little hobby. I get to analyze and look at stocks, buy them, show you guys the increase in my income, show you the progress, make these YouTube videos. That is a big emotional reason, but I will never promise people that I'm smart enough to outperform the broad stock market index funds. I don't think I'm that smart, and I would never tell people that. I mean, maybe we're gonna look back 20 years from now and be like, Andrei's dividend stocks are way better than the stock market, oh my God. But the chances of that happening are kind of 50-50, so I would never promise that, and I never tell people to copy what I'm doing, and you'd probably do better investing in an index fund and with a lot less work. That is the honest truth, and I'm okay with that. And if somebody watches my dividend investing videos and figures out, wow, I love this investing thing, but then somewhere down the line figures out, wow, he's an idiot for investing into individual stocks, index funds are way better, that's totally cool with me. I'm just happy that I got to inspire somebody to begin investing in the first place. Individual dividend stock investing really works well for my personality and my emotional profile, because sometimes it's not always about maximizing every single dollar to the max. It also has to work for you, and you have to be happy with yourself. And I've tried all these different strategies, and this is just what seems to work best for me and gives me the most staying power. Love you guys. Enjoy the rest of your weekend. I will see you all on Monday. Bye-bye.